Hello and welcome to the State of the Fleet Industry, a weekly video series produced by Automotive Fleet magazine. I'm Mike Antich, editor of Automotive Fleet, and today I'd like to examine what's occurring in the commercial fleet market for the week of November 2nd, 2020. So last week I discussed what the current trends are in terms of operating costs for commercial fleets and provided a forecast as to what operating costs are trending to be once we enter calendar year 2021. So today I'd like to examine our largest expense in fleet, namely depreciation. I'd like to discuss what are the current trends in the wholesale market where the majority of our out-of-service fleet vehicles are remarketed. And I'd also like to provide, towards the end of this presentation, a near-term forecast on the anticipated resale values by vehicle segment in the wholesale market for the first quarter of 2021. So what a lot of fleet managers don't realize is, in addition to managing assets and providing work tools for our employees, fleet managers are very much in the market of manufacturing used vehicles. And like everything else, depreciation and the used vehicle market has been impacted by the pandemic. And to get a better idea as to where this market is going, it helps to put things in context and start from the beginning of the pandemic and see how the resale market has evolved from its start in mid-March up through to today, the start of November. So the lockdowns primarily started occurring in the mid-March timeframe, and at that time there was a lot of uncertainty, as we well know, and resale values did drop at that time, especially as there was that uncertainty as to what would be the full impact of the COVID-19. And almost immediately, many companies started adapting cash conservation strategies, and some of these fleets actually instituted knee-jerk reactions where they actually adjusted their depreciation rates in order to minimize monthly expenditures and to assist with the corporate cash flow. Also in this time frame, as we well know, there were widespread closures, not only with dealerships, but all of the physical auctions closed their lanes. All of the OEMs temporarily closed their factories throughout North America. And at the same time, there were massive layoffs occurring throughout the economy at Depression-era levels. All of this accentuated the uncertainty in the resale market, and initially demand for used vehicles fell. Overall resale prices declined about 6%, and things were looking pretty bleak. And then, to everyone's surprise, the market started to improve dramatically during, especially in the last part of May and all throughout the summer, especially as states started to reopen their economies. And even though all of the physical auctions had closed their in-lane bidding, there was a widespread adoption by dealers in accepting online sales as a way to buy and remarket vehicles. And nobody would have predicted that as early as the beginning of this year, that dealers would embrace online sales. And also during the summer, what helped improve this were the government stimulus monies that came into play. Many used car dealers reported that their down payments were almost matching with what the government was sending out in terms of stimulus monies. So this ended up creating a strong demand for used vehicles, and as the factories were closed, replacement units weren't coming, and what was happening is there was a diminishing supply of inventory of used vehicles in the marketplace. And what happened was, it was like a market that we had never seen before. It was unlike any other market. It truly was unprecedented, and no one predicted it. The predictions were all in the opposite spectrum. Resale values were strong, demand was strong, and all of that was being fueled by the fact that inventory was low. In addition, we had the ongoing low interest rates, and there were higher trade-ins from dealers that were selling vehicles that they did have in inventory. Also in these initial months, there was definitely a bump in employee sales, especially through the massive layoffs that were occurring. Many of those individuals did have company vehicles, and in many cases, those company vehicles were the sole transportation within their household. And as individuals looked to see what the inventory was like in the used vehicle marketplace, it was limited. And all of a sudden, buying that used company vehicle in an employee sale at fair market value, looked pretty attractive for a lot of people. So initially, there was that bump in employee sales. The other factor that was going on that benefited the fleet resale market was the fact that there has been this unevenness within the economy. Certain segments are definitely down, but other segments are doing well, one of which is construction. The construction market has been going very strong during the pandemic, and as a result, there's been a strong demand for utility vehicles and work trucks. And the other factor that a lot of people don't talk about, but it's very true, is during the shelter-in-place mandates, people were really kind of constricted as to what they would use their disposable income from. And there was a sharp uptick in terms of home improvement. And contractors were in demand, and those contractors were looking for used work trucks and vans. So there was an ongoing strong vocational vehicle market that is still going on to this date. And demand has really gone up to the roof, through the roof, especially as the inventory of these vehicles remain limited. What's caused this fact of limited supply is that many fleets have held onto their work trucks in service, so they haven't been sending them into the wholesale market. But on the whole, any type of truck-related product is doing good in the wholesale market. Large pickups in particular, their resale values have increased double-digit, 23% since the beginning of tracking back in March. So on the whole, trucks have been going very strong in terms of resale value, and it goes back to the larger dynamics, in particular with fuel prices, because fuel prices dictate a lot as to what sells well in the used vehicle market. When fuel prices are low, as they are now, relatively speaking, that bodes well for the sale of SUVs and pickup trucks. When fuel prices are high, that bodes well for smaller vehicles, your subcompact, compact vehicles. But with prices now relatively stable, relatively low, the weakest segment in the resale market right now are your subcompact vehicles. Another ongoing trend in terms of resale values has been with sedans. Sedans on a whole, or as a percentage of fleet portfolio, has been decreasing. And this is nothing new. It's been going on for quite some time now. And it's primarily as a result of buying taste, both in the retail and on the fleet side of the market, has been shifting away from sedans towards your crossover vehicles and small SUVs. But that doesn't necessarily bode badly for sedan resale values. Actually, they've been pretty strong. They've been continuing to be strong during the pandemic. And as the volume of sedans as a percentage of an auction inventory starts decreasing, I think you're going to find that it's going to reach equilibrium with demand that's out there. That market has not disappeared. The market is not the same size as it once was, but as there's a percentage of sedans in the market decreases, it does reach that equilibrium, and the forecast is that sedans should continue to do well in the coming months and well into 2021. Now, the one area of concern is with crossovers. There is a saying in the used vehicle market that what sells good new sells good used, and crossovers are definitely selling well new. They're very high demand, and you can see it just by looking at the vehicles that are on the road around you when you're doing your commutes or driving your errands. But there is a concern that the volume of crossovers, small SUVs at auction is increasing, and this will soften resale values. That doesn't mean that they're going to collapse or anything like that. Those values still remain so strong, but people do see a softening. There is a very much a connection between supply and demand, and when supply increases, demand starts to go down because those people that need it have already acquired those vehicles. And the other area that continues to be a strong area is any type of work vehicle, vocational vehicles, service vans, utility trucks. All of these segments are definitely outperforming the guidebooks. And on the whole, I've heard that resale values on these are up as much as 15 to 18%. The resellers can't get enough of these vehicles. Now, there has been some softening. If you're following the guidebooks, reading their market analysis, there has been a softening that's been going on in the wholesale market, starting latter part of September and now through October. But most of the people among fleet remarketers don't express a lot of concern with that. They actually see the market returning back to what normal levels might be in winter months. The market in the summer has been just unprecedented. It's been achieving record returns for many vehicle segments. So what's happening now is, yes, indeed, there is a softening of resale values in the month of October. We're seeing that, but there's not alarm over it. It's more a realization that we're probably going back to normal levels that have been occurring. And a lot of the concerns that were voiced early on in the pandemic about a large influx of repos or repossessions re-entering the market as lessees were unable to make payments on vehicles, or off-lease vehicles coming into the market as financial institutions ended their payment deferral programs. Those really haven't happened in the volume that we were anticipating. That's not to say that they're not going to happen, but it hasn't happened now. And I think what's happening is a lot of financial institutions are working with their lessees to work out plans, and the stimulus monies definitely help defer some of those repossessions that would have occurred otherwise. The other thing is there was a lot of discussion about massive defleeting by rental fleets. And again, that hasn't happened primarily because they're using a number of different channels. Auction is just one of which. And those are all very savvy remarketers that work for these rental companies. So they're looking to use those channels that are going to try to minimize the softness that's going on in that market. So those are all positives. And another positive is the fact that interest rates have remained low, so it definitely does assist used vehicle buyers in getting into vehicles. There is an anticipation, as I said, that there will be an uptick in repos and off-lease units, but people now are forecasting that most likely will be occurring in the spring of 2021 into the summer months. The anticipation is that there will be at least one more government stimulus program occurring after the election, and that hopefully should help people tide over some of their financial situations on a temporary basis. So what is the forecast? The forecast is that resale values for 2021 should continue to remain strong. The anticipation is that we're expecting resale values to remain strong for the next 3 to 6 months into the spring market. So good news for fleets, and there is a strong demand for the types of vehicles that we're taking out of service and putting into the wholesale market. So with that concludes my State of the Industry presentation for the week of November 2nd. So I'd like to thank you for listening.